Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the chart that predicts the end of this bull market. Will it come to fruition? Only time will tell, but it's incredibly interesting what the charts are saying. I'm also going to have a look at the ETF board and show you why the Genesis selling that's been going on hasn't materialized in the crash so far. And as per usual, I'll have a look at the 60-day cycle, the wider markets, as well as the longer term picture and why the halving presents an incredible opportunity with the Bitcoin miners. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so let's get straight into this and have a look at the chart. But please always remember, this is only one chart. There may be other charts giving a completely different picture. But my job is to present to you the facts in the charts, and then you can make up your own mind. And I'm going to start off with this default chart that I show you at the beginning of every video, and that is the BLX chart. Okay, just to zoom out on the monthly chart, this is what this chart is saying in terms of where the bull markets usually end. So in the first cycle back here, so the top of the bull market is actually being predicted by the bottom of each of the cycles and the halvings. So what do I mean by that? If we go back to the first cycle here, the market bottomed out in November 2011, and the halving, as you can see, was exactly 12 months later. And if you take that to the top of the market, this yellow line, that was 24 bars. So the halving was exactly at the midway point between the bottom of the market to the top of the market. And if we look at the second halving here, from the bottom of the market at this point, back in January 2015, the halving from that point was 18 bars. That's 18 months. And then the top of the market, if you take it to the yellow line, was 36 months. So that's just 1 month shy of the doubling of that number of months. So the halving was virtually at the halfway point to the top of the market. And if you look at the last halving back in May 2020, from the bottom of the market here in December 2018, if you take it to the halfway point, i.e. the halving, that was 17 bars, 17 months. And to the top of that market was exactly 34 months. So once again, the halving proved to be right in the middle from the bottom to the top of the market. So if that was to continue this cycle, then from the bottom of the market in November 2022 to the halfway point, i.e. the halving, which we're expecting in April, that's 17 bars, 17 months. And if we took that to 34 bars, that takes us to this yellow line here, which is September 2025. So just based purely on the charts, this would suggest that we're going to top out in September 2025. Please remember, it's not me who's predicting that. I'm just reading the chart and bringing to your attention what the charts are saying. And just based on this indicator, it would suggest that the bottom of every market and the halving, it seems to predict when the top of the market will be. So the main purpose of these charts and eliciting very useful information, to me this is very useful information. So what this information does, it gives us an edge over somebody who isn't aware of this information. So use that information however it may benefit you. Okay, I'm going to move on to the ETFs. And many people were expecting a little bit of a crash, if not a big crash, when the Genesis here were cleared to sell the Grayscale shares valued at about $1.6 billion. So this is what's really been happening. If we have a look at the real facts here, we can see why the crash that was expected hasn't materialized. So this is the assets that are inflowing and outflowing out of these ETFs. This is the GBTC, the Grayscale exchange here. And you can see that over 7 days of Bitcoin dealings, we've lost 10,646 Bitcoins. Whilst at the same time, the other ETFs, like IBIT, i.e. the BlackRock ETF, they've bought up 14,925. So they've more than offset the loss by Genesis in their selling of Bitcoin in Grayscale. So they've bought up 40% more than Grayscale have lost. But not only that, if you look at the Fidelity one, they've also bought 7,000 in the last 7 days. And if you look at ARK, they've bought 1,900, so another 2000 here, and Bitwise another 500-600 here, etc., etc. So what's happened is that while there's been a lot of selling by Genesis, it has been more than absorbed by the ETFs. Okay, something really interesting for those people who want to know where the price could possibly go. In classical charting, that from the bottom of the market, when the patterns develop on the price action, it's quite conceivable that the channel that it forms could be a clue to where the price could easily go. So the channel at the moment that's been forming since we bottomed out here at 15,400 and then found support at this level here, whilst at the top of that channel we've got support here, resistance here, and we've got another resistance at this point. So that gives us some idea of a channel forming to September 2025. And if you extrapolated that line at the top, that would give you around about 200,000. And the support of that line gives you around about 80 to 85,000. So nobody knows where this is going to be, but this channel would suggest that it could conceivably be in a range of anywhere between 80,000 and 200,000. And the reason why I've brought this up is that should this channel break, if we should get some sort of a break and then a support in terms of retesting the resistance point, then this really is giving us a clue. This break anywhere around here, wherever it breaks, that will give us a clue that this price is going beyond the 200,000 mark. I'm not predicting that. I'm just showing you the clues that are being embedded in the charts as we go along. Just like the clue of the pi cycle, as I've been mentioning for many, many months now, if you've been watching my videos, that should we come and hit the pi cycle, which is currently at 65,000, if we hit that pi cycle before the halving, this red line here, you can see that's above the channel here. And that is a sign that we could top out at the end of 2024 rather than September. So we've always got to keep that neutral and fluid and flexible approach, that while some indicators are telling us September, this indicator might tell us that we're having a left translated cycle and we may top out at the end of 2024, which means that a big blow off top would be really coming here at the end of 2024. And that's certainly going to be above this white line, above this channel here. So just keep that in mind. Keep a neutral, open and flexible approach to the whole thing here, and don't get stubborn in a narrative which may or may not play out. Okay, I'm going to move on to the wider markets and I'm going to have a look at the SPX. If you've been watching my channel, you'll know that we formed this particular neckline at this point here. This was an inverse head and shoulders which normally breaks on the fourth or the fifth go, and it broke on the fourth go here. And since then we've had this rising price action, and so far we are still from this point onwards here around about the 4,000 level. We've gone all the way above the 5,000, and you can see very clearly how strong this bull run has been. So out of 17 weekly candles, we've only got 2 red candles along the way. And as they say, the trend is your friend until the end. Well, this doesn't show any signs of ending anytime soon, according to this weekly chart, as you can see here. But certainly always look out for these necklines. Wherever you see a neckline and the forming of a inverse head and shoulders or a cup and handle like this, that is a very high probable play to the upside. And if you were to put the SPX in the framework of the 60-day cycle, you can see that we bottomed out on this 60-day cycle at this point on the 5th of January. And as you would expect on a right translated cycle, before the halfway point, we peaked out at this point here, went into the mid-cycle low, and look what's happened now. We've gone above the pre-midpoint to make a higher high. So we've now got a right translated cycle. So that's giving us a clue that this has further to run before it comes into the 60-day cycle low, somewhere around about the beginning of April. So very important developments with the SPX. And for those of you who like to know where the top for the SPX might be, if we take a measured view from the bottom of this head and shoulders pattern to the neckline is around about 31%. So taking 31% from the neckline would give us a ballpark figure of around about 6,000 for the SPX. So you can see there's quite a lot of room over the next 12 to 24 months for this to go all the way up to the 6,000 mark. Similarly for the Russell 2000, this is now just coming onto the neckline that it created over here. And last week, as I mentioned, that we'd just broken above it, we've come back and retested this support line one more time. before I expect this to go to the upside. So that's also looking healthy for the 12 to 24 months. And some of the Bitcoin miners are included in the Russell 2000. And we're expecting very big things from them. So that would suggest, again, one more time, that this is something that's going to be going up over the next 12 to 24 months. Quite a lot of people interested in the gold chart, so I'll just give you my insights into this. What we have on the bigger picture view is this particular trend line from the top here at around about 2000, going back to 2011, and so far we've got rejected at this point, perhaps at this point as well, and this time around here as well. So this one would suggest that we are going to break up anywhere in this region in the next few months. And previously I'd been mentioning to you this particular neckline over here where we broke on this candle, and since then we've had a massive run to the upside at this point. And similarly, this type of a neckline has been created at this point here. So we can expect really with a high probability for it to break anytime soon in the next few months. And we can also see that it's forming this ascending triangle at this point with a rising demand here. So far, recently, 3 months ago, we got rejected at this point. So far, we're having some sort of a correction. And when we look on the daily chart, we can see that there will be some expectation for it to come back down, perhaps to retest this trend line here at around about 1900. So on the daily chart, you can see that that trend line got broken at this point. We've come back down, and then now retesting that support line over here as a resistance at this point now. So I would expect with a higher probability for this to make its way to the downside in the short term, in the next few weeks. This is what I would expect. But if the gold price recaptures this, then this would be incredibly bullish and would be a sign that we're going to break out as soon as we get above to this line one more time. So just keep an eye on that if you're following gold. Okay, moving on to the dollar. As mentioned in the last few weeks, we had these gravestone doji candles forming at the top of this resistance point all along here. And the support there and the resistance there. And we said that at this point, at resistance, we would expect to fall from here. So this is the level where I would be looking to find maybe a little bit of support, but I would expect that over the next 12 to 24 months to be coming down to these levels here at around about the 95 or even lower down to 90 here. So just keep an eye on the dollar. The charts seem to be playing out, but we do have some support at this point and at this point here. And that augurs well for the markets in general. And so the whole picture, if you look at it, the overall picture is now painting very rosy bull market conditions for the wider markets as well as for Bitcoin and crypto in general. Okay, so moving on to the Bitcoin 60-day cycle, what is it telling us now? Based on what we've just seen in the wider markets, very similarly, if we just zoom out on the 60-day cycle, a 51-day cycle low, 60-day cycle low, and the last one being a 43-day cycle low. What we can do now is to take away this question mark, because we can see quite clearly that that was the bottom over here. And I put that down just when we recaptured the top of this support line. So the current cycle started back here on the 23rd of January. The midpoint, as I've been pointing out, is that we made a top just before the midpoint, and just like the SPX, we came back down into the mid-cycle point, and it looks with a higher probability that with the rest of the cycle here to go, you would expect with a higher probability for it to come back up and beat this level here at 53,000 and make the right translated cycle and see how far this can go before we get into the 60-day cycle low here. And the question is, can it go to 58, 60, 65? Only time will tell, but this chart is telling us that we're going to break the 53,000 within this 60-day cycle. And if you look at the important levels for Bitcoin, what we've got now is 3 layers below it. We've got this level here, which we mustn't really break, between 46 and 48. If the price went below this level here, then you would think that there's going to be some sort of a big correction on the downside. But as we've seen with the wider markets, with the ETF buying and everything else I've shown you in this video, that doesn't seem like a high probable play at this moment. So I would suggest that is less likely to happen. And if you look at the bottoms of these wicks at around about 50,500, this is really the first sign if this is going to break down to the bearish side. So keep an eye on the 50,500. Every time we've come here, we've been bought up by all these wicks here, you can see quite clearly that as soon as there's a little bit of a dip, the ETFs and everybody else out there who's buying up Bitcoin, they're not allowing it to go below the 50,500. And the top of that is obviously the 53,000. So we're now in this channel at the moment, consolidating, just like we were consolidating down here before eventually breaking to the upside and creating this bull flag at this point here now. And those of you with a keen eye will notice something here. If you've been watching my videos, I always mention this, that once it breaks out in a big bull flag, if it's consolidating at the top third of that rally, this is normally a high probable play to the upside. If this had come back down to about halfway, then that would have been a clue that we're going to go further down. But this would suggest, i.e. at the top third consolidation, that we're in this continuation pattern to the upside. So if you're in the Bitcoin market or in the wider crypto market, or you're following the 4-year cycle like we are here at Wisdom Bites, the strategy is quite clear that it is more riskier at this moment, at least anyway, to be out of the market than in the market. And if you've been watching our videos here at Wisdom Bites, you'll know that we created our long-term portfolio back here at the end of 2022. And if you've missed this move, then what this halving does is to present an incredible opportunity for you with the Bitcoin miners. So far, if you measure Bitcoin from the bottom at 15,400 to where it is currently at 51,100, Bitcoin's gone up by 230%. But if you measure that with the Bitcoin miners, and I'll take Marathon as an example, currently it closed on Friday at 23.99, and that would represent a 676% rise. So you can see there's a 3x leverage that's played out so far from the bottom of the market at the end of 2022. However, the real leverage should come after the halving, because if you look at what's happened in the halving previously in the last cycle, this was the halving with Bitcoin back in May 2020. If you take the measurement from the day of the halving, which was around 11th of May 2020, to where it topped out at 69,000, that was a 7x move to the 69,000 top. If you did that with one of the Bitcoin miners, i.e. Marathon here, from that day onwards to its 84 top, also in November 2021, that was 135x. So you can see the leverage play that you can get with the Bitcoin miners. So this would suggest that if you've missed the move for Bitcoin from 15,000 onwards, then the Bitcoin miners may present a golden opportunity to get in on the ground floor, even though they've gone up by 600% already so far. If you think that Marathon was an odd one out in the last cycle, if we take another one of the major miners, CleanSpark, once again from the start of the halving to its top, that was a 25x, once again outperforming Bitcoin. And finally, the third one, Riot Platforms, exact measurement for that would be a 51x. So you can see quite clearly that Bitcoin miners present an incredible opportunity to outperform Bitcoin, especially after the halving. So this halving is presenting a golden opportunity for those of you who are okay with volatility. It's not for the faint-hearted, because as you can see from the bear market, this came down all the way by 95%. So if you can embrace the volatility, then the Bitcoin miners may be presenting a golden opportunity for those of you with a wider sense of investing. So for those of you who are interested in the Bitcoin miners, you can join us here at Wisdom Bites in the private Bitcoin miners member section, where we focus only on the Bitcoin miners. There's no distraction from the Discord channels or the Instagrams or anything else. It's a very simple focus on the Bitcoin miners and trying to elicit as much profit from the Bitcoin miners as we can over the next 12 to 24 months. So it's a wonderful, exciting journey if you want to join us. And the reason why we don't offer Discord channels or Instagram channels, those are the types of social media that will ruin your portfolio. And it's something that I would never encourage anybody to go to. So you may well be wondering what we do in the private member section. So back in 2023, we had our Bitcoin miners long-term portfolio, which started off with around about $100,000 with a target of $1 million. And we ended up at 434,989. And you can see with some of the miners here, we achieved 500%, 400, 459, etc. and 457 here. Overall, we achieved around about a 300% improvement with the Bitcoin miners, and this is all before the halving. Currently, we've taken this amount of money and rejigged our portfolio, and we now have two portfolios. One is a passive portfolio, just like the one in 2023, and we also now have a trading portfolio where we do swing trades as well as ratio trades. And so far in 2024, our passive portfolio is down by 4%. If you've been following the Bitcoin miners, you'll know that they've been on a little bit of a correction of around about 20 to 30%. So with that percentage fall, we are only 4% down on our passive portfolio, but we're up 12% on our trading portfolio where we do the swing trades and the ratio trades. And the target that we've got for this current bull market is $5 million. And that is based on the leverage play, as I've just explained to you. And please remember, this is just a target. If we achieved 4 million or 3 million, I for one would be very happy to do that. But you can't reach a target that you don't have. So it's always good to have targets. And we never know that we could even exceed this target. And only time will tell where we get to. But so far, the long-term portfolio is proving to be an incredible success. If you want to join us on this incredible journey that we've got to the top of the bull market, then all you have to do is click below any of my videos on the join button here or in the description box over here. We also do market updates on a daily basis, sometimes many times throughout the day. So that is part of the feature for the private member section. Every day we have a review of the miners at the end of the day. And if you want to join us, it's £12.99, which is the equivalent of one coffee per week. If you feel that you want to take advantage of that opportunity over the next 12 to 24 months and it's worth a cup of coffee per week, then join us in the private member section. And you can see that the leverage journey hasn't even begun yet. We're only a few months away from the start of that wonderful journey to the top of the bull market there. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.